This video is for educational purposes only and should not be considered financial advice. The magic of trend lines with breaker blocks. In our last video, we showed how powerful a breaker block can be, especially in its amazing ability to allow for a tight stop loss. In one of our other videos, we also discussed the unique power of trend lines to tell you when price has changed direction. Now, if we combine these two approaches, we can get amazing results. In this video, we will be going over the magic of using trend lines with breaker blocks. Outline, introduction, using breaker blocks, trend line breaks, strategy, combining the two approaches, examples, recap. Using breaker blocks. A breaker block is the last up candle before a down move that takes liquidity, or the last down candle before an up move that takes liquidity. But how do we know that when price returns to a breaker block, it will respect that level in reverse direction? One tool that can help us with this is the trend line. Trend lines. Once you draw a trend line from one swing level to another, you're looking for price to close beyond that trend line. A trend line break is a strong signal that price is likely to change direction. We are then looking for an entry when price retraces back to that trend line. If we combine this approach with the breaker block theory from ICT, we can look for that retracement to coincide with a breaker block. Here's the strategy. Draw your trend line between swing highs or swing lows. Wait for price to break and close beyond that trend line. Look for a retracement back into a breaker block near the broken trend line. Enter your trade with a tight stop loss just outside the breaker block. This setup gives us more confidence in the trade because we have confirmation from the trend line break and a potential reversal at the breaker block. Together, these tools allow for precise entries with minimal risk. Let's look at some examples. In this example, we see a trend line break and a breaker block right here. This is a bearish breaker block, which is the last down candle before the up move. Once price breaks the trend line, we're looking for a retrace back into that breaker block. And once it gets rejected, that's when we enter. Here's a second breaker block that occurs during the same session. This first move took liquidity, and then this move took the liquidity of that previous move. You have a trend line, a break, the last down candle before the up move, and then price retraces back into it, and that is an entry once it pulls out. In this example, we'll add one more layer to the trade idea, and this is time-based liquidity. Once the Asian session liquidity is taken, we see a trend line break from this swing low to this swing low. We see the last down candle before an up move, and then price retraces back into that candle and then takes off to the downside. Here again, we have Asian session liquidity taken, and during the London session, we have the last up candle before the down move. This is a bullish breaker block. Price moves away and then comes all the way back to it. And then once it respects it, that's when you enter. And again, we see our tight stop loss right after the bottom of the breaker block. In this last example, we see a higher time frame collection of breaker blocks. This is a great way to take advantage of even larger moves with breaker blocks. We see a trend line break and then a retest of a breaker block, the last up candle before the down move. And in this example, we're going to give you a pro tip, which is to wait for a swing level to be formed and then broken. We see this swing low formed, but it's not broken. We see this swing low formed, but it's not broken. Then this swing low happens, and it actually breaks this swing low, and that's where you get in. We see this trend line, it's broken. We see the last up candle before the down move. Price moves away and comes right back to it, and then closes inside of it. And again, we're using our pro tip. A swing low is formed. Once that third candle is broken, that's our entry, and it moves to the upside. This last breaker block is part of the larger move of the 1 hour chart. We see this down move and then another down move that takes out this low. Once price comes back to this last up candle, we wait for price to close out of it and then also to form the swing low. And once that third candle of the swing low is broken, that's when we enter. Recap. Breaker blocks give us powerful price levels where reversals often happen, especially after liquidity is taken. Trend lines help us recognize when price is likely to change direction. When we combine the two, we create a high probability setup. A trend line break signals direction change, a breaker block gives us a precise level to enter, and a tight stop loss keeps our risk small. This combination boosts your confidence, sharpens your timing, and helps you grow more consistent in your trading. Practice spotting these setups, and you'll start to see just how powerful they really are. If you found this video useful, please hit the like button, subscribe, and drop a comment with your thoughts. Let me know if you've traded this setup before or if you have any questions. Thanks for watching, and I'll see you in the next video.